Coming to you live from downtown Detroit, this is Benzinga's Premarket Prep. With your host, Joel Connon.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Friday, April 7th edition of Benzinga's Premarket Prep. Spencer Israel. No Joel today. He's out traveling, so just myself and Dennis Dick. We're going to be joined at 8:35 by our guest, is Ryan Craver. He's probably our go-to retail expert. He's the SVP of Emerging Brands and Digital at the Lamore Group. But before we get to Ryan, we've got to talk about this jobs number we're going to get today. We're going to talk about the Syrian airstrike and how that affected the markets last night. So we do have some big, not necessarily individual stock news, but some market news as a whole. Looking at the S&P futures, you can actually see last night the moment that the news broke right around 9 o'clock. Took a dip there to a low of 23.36.75. Now we're back up above that number this morning. Looking at gold, gold rallied on that news as well. A little bit back down from the highs, and crude is I guess the big one since Syria. Not a huge oil producer, but in the region nonetheless. You can see what happened there overnight. Dennis, how you doing today?
Well, looking at those futures, nice rebound off the lows there. Obviously, the worries right off the hop that, whoa, what are the long-term implications for this? But, this market works. We shrug it off, and the market is right back, even though, obviously, there could be some implications for the missile actions there last night. What I am watching here, is, stocks that do better. I'm not saying we're going to war, but do better when, obviously we're having, missile launches. Lockheed Martin, for instance, I'm looking at it, trade up 4 points here this morning. Raytheon, RTN, I think about General Dynamics, which is GD. I also think about Northrop Grumman, which is NOC. Those are four stocks that benefit from hostile actions. Also looking maybe Boeing. Boeing's trading up here 2 points in the pre-market. Oil's an obvious one. Oil got a big spike when the missile launch was announced there last night. And gold also spiked there as well. So that's what I'll be watching here this morning. Maybe I could jump into some technicals on those, Spencer, or what do you want to do?
Yeah, let's jump into, let's start with Lockheed Martin.
Okay, so this is what you think about right away. Lockheed Martin trading up 4 points here in the pre-market. Stock that's just kind of been hanging out here for the better part of a month and a half. Every time it sneaks above 270, it seems to run into trouble here. That's the only concern. And the only concern is if this is a one and done, and, if this is a one and done with, we're just going to do the missile launch and there's going to be no, other retaliation or anything like that, then you think about, okay, well, this is probably, not going to be that beneficial for Lockheed Martin here. So LMT 1.5% trading up in the pre-market. Not sure I'm chasing any of these, but they're all on the radar here. And I mean, if, for whatever reason they start to pull back in, maybe then I get interested. We know there's Necco, B. Trudell, thank you. We're working on that. Hopefully they're going to work through those issues.
Let's look at what's interesting is we're talking about this on the pre-market show. Dennis, this attack was not something that was telegraphed, right? This was a pretty quick turnaround from what Trump said he saw on the news 3 days ago, and pretty fast moving attacks, and you saw it sort of reflected. There wasn't a lot of I would guess attack projection price into the market, and you kind of saw
and that's why you see the big jump here in stocks like Raytheon. Jimmy A pointing out here that those were Raytheon Tomahawks that were launched there last night, so it's trading up 2.5% here, obviously using their missiles. So this is something I think that maybe people expected, just not so quickly. This is basically 2 days after those chemical attacks. That we're already retaliating here. So, obviously, market got a little bit nervous last night, selling off initially on the quick retaliation there. But at the same time, these stocks, benefit when you get into, war-like situations here. And we're not saying we're going to war here, but, it's a first step in a process here. We don't know what the next step is here. So that's why you're seeing money flow into these sectors, just in case, this isn't a one and done.
Yep. And let's look at. So I have Lockheed Martin up. Raytheon. That's not RIT. What is it? RTN.
RTN. And Jimmy A is saying it's 1.6 million a missile. Wow, it was expensive. 59 missiles last night. So they just dropped some money to Raytheon, obviously. RTN
they
and
did.
Obviously immediately benefiting it up 2.5% here this morning. Technicals, though, RTN, lots overhead supply up here again. So, we're 155, 156. You got to look and see what happens at 930. That's more indicative here because we've only traded 7,500 shares. Obviously, it's probably good news that they're using Raytheon, that those were the missiles that they used. But you got to think if it is just a one and done, then this might just be a one-time spike, and then they might start to leak back down. So that's why I just don't know if I want to jump in and chase these stocks here this morning. But wait till 9:30. Let's see what happens when the real volume comes in, and then obviously you can get a better indication of what the real money's thinking because when only 7,500 shares are traded, you've got a lot of price discovery to still happen to this issue.
Yeah, and like you said, we have no idea on the long term on the timeline of the future tax. Right? We don't know if this is one and done. We have no idea. This kind of happened really fast last night. At just from 9 o'clock onward, we have no idea if this is, like you said, a one and done. We don't know if this is part of a going to be a larger campaign. So I guess we're going to have to wait and see. But what about reaction in crude? Because Syria, not a huge oil producer, but they're in the Middle East. There are some crude implications there. So what did you see last night as sort
You saw oil pop too, and oil is still trading up again. We are off the highs on oil here though. But you did see oil pop, and if you want to jump into some individual stocks here, I mean, we've been in consolidation station in a stock like ConocoPhillips. COP has just been hanging out here. It's had the gap up since they announced that they were selling some assets there, and obviously now it's just been sitting here for 4 or 5 days between $49 and 50 and a half. So if this could get up and get lifted up over 50 and a half, then it opens up to 52. But it's just been hanging out here. ExxonMobil's been hanging out near the lows, but it looks kind of itchy. The chart's been drifting up. Chevron, the same thing. On the oil stocks look, like they put in a temporary bottom. Now, this isn't bad news for oil stocks here. So it's not surprising they're getting a little bit of a lift this morning. ExxonMobil trading up 30 cents. Chevron at the pre-market has traded an odd lot up there, up $1. So you're looking at these things catch a little bit of a bid here early, and naturally you think, if you're starting first steps into potentially, like something like a war, these are the stocks that benefit under those circumstances. If it is a one and done, and it looks like that there's going to be no retaliation or there's going to be no other issues there, then obviously you're going to see these stocks pull back. So it's macro headlines that are going to be driving the price of a lot of these issues over the course of the next little while.
Yep. So it's something we're gonna have to keep an eye on there. Now, Dennis, what's like the trade? Is there a trade that you can remember making around like an armed conflict trade, or is there something that you've learned from previous armed conflicts? Maybe not. I don't know.
Kind of just what I went through.
Okay.
Obviously the big stocks you think about: Raytheon, RTN, the NOCs, the GDs, and the Lockheed Martins. Money's going to fly out of different things too. But overall, like you see the sell-off in the markets, it's not always the case that the market will get killed if we were to go into war-like. Because, wars, think about, even World War II, it brought us out of the Great Depression. So, wars are expensive. It can sometimes actually kickstart an economy, too. This economy doesn't need to get kickstarted, though. So, I think about the direct beneficiaries, and those are the stocks I just mentioned: LMT, Raytheon, NOC, General Dynamics, potentially Boeing as well. And then you think about gold, too, because people, like to flock into gold when there's uncertainty. And when there's political uncertainty or potential for a war, people will flock to that. And they've been flocking to gold here for a while. Let's just break down the technicals a little bit here in the GLD if you want, because this thing has actually come significantly off the lows where we were just a little while ago, and it's quietly staged quite a little rally here. I know we've consolidated here for the last couple of weeks, but really since the lows here, and I'm just going to take you out, Spencer will take you out to a 3-month chart there. We bottomed back here just at the beginning of, or in the middle of March at 114, and in the last half, so basically in the last month, we've rallied, 5 points here on the GLD, which is a nice little rally. SLV has kind of been the same story here. Obviously, silver and gold moved together very well, and silver bottomed just under $16, the SLV, now trading up here at 17 and a quarter, but consolidating here for the last week or two. So you wonder if the next move's going to be higher. Today's, it's both are lifting, obviously. SLV is trading up at 17.38, and gold's trading up another $1 here. So those are stocks that could potentially be moving here this morning on the news of the missile launch.
All right, 8:10 now. We have about 20 minutes till we're gonna get our jobs number for the month, and
Well, that's a big news here today. Not individual stock news,
yeah.
but missile launches, jobs numbers, some stuff going on here. That jobs number is going to move the market. The one number
Wait,
that
but
we get that still moves the
why do you say
market.
that? Because we've seen the last few really
Well,
have been
because there's more
snoozers.
uncertainty right here, right now.
Okay.
So, and we have seen, a big move here. We saw a big move off the minutes. So, just a couple days ago, we got the Fed minutes there. And that's why I think you're going to see a bigger move here off the jobs number, because this is what they're looking at for the next potential interest rate decision here. So I think, a lot of people are going to, obviously if we get a hot number here, then you start to think, that the interest rates could potentially be going up again sooner than later. So if that's the case, you're going to buy, the financials are going to catch a bid. So hot number, you're going to see stocks like financials catch a bid. If it's a soft number, you'll see the financials get hit. And let's just do a quick preview here, and we'll jump obviously after we get the number. We'll look at these stocks as well. But early in trade here, we're seeing the financials very mixed, actually, which is interesting. We got Bank of America just kind of quiet, trading flat. It traded up a little bit a while ago. It was trading down earlier than that, so it's kind of chopped around here in the pre-market, and now it's kind of hanging out here. We know it got hit a couple days ago on the minutes. It kind of just had a quiet, consolidated day yesterday. Just trading in a little 50-cent range. Today, I think you're going to see a big move here, one way or the other, depending on what this jobs number looks like. We'll have the Brentster breaking in when we do get that jobs number at 8:30. JP Morgan had the big sell-off and bounced back a little bit there yesterday. It's just hanging out here in the pre-market. Citigroup, all the financials are kind of just hanging out here now. They're all near flat, even though they've kind of chopped around here in the pre-market, because if I look earlier, they were getting hit a bit. They bounced back here now, so it'll be interesting. I don't think it's going to be a whimper this time, though. Like I know you said the last couple times we've had, very quiet action off the jobs number.
Total
But now
snoozers.
with the missile launch, which with the big hit off the minutes, I think the market will move this significantly one direction or the other on this jobs number. So I think there's going to be some more fireworks as opposed to a whimper. At least I'm hoping for as a trader.
Yeah, well, I think this. Yeah, we'll see if this is just wishful thinking or if you're actually right. Oh, Dennis, do you want to hear about my car story from yesterday? I forgot to bring it up.
Yeah. So
All
what
right.
happened with you yesterday?
Yeah, my car was someone decided to run into my car in the middle of the night when I was sleeping and then drive away, and so my car may or may not be totaled. We're gonna find out today, but that's why
What happened?
that's why I
So
missed
you're-
yesterday's show.
Okay, so start your day. So you're just walking out to your car and you
Yeah,
look at your
I walk
car.
out to my car and I see that my the back right wheel is propped up on the curb, and I'm like, I don't think I parked on the curb. That would be that would be silly of me. I don't think I did that. That would be weird. And then I get out to the driver's side and quite a shock to see the entire back left of my car dented in and mashed
it's a
up, and the
horrible feeling.
wheel is crushed a little bit, and all sorts of fun stuff. So
Old hit and run.
little hit and run action there in Detroit a few nights ago, and but we're hoping to. I have myself a nice Jeep rental car that smells like smoke. So
So you call the cops.
yeah,
Did
so
they
so
come?
I call the police, I call insurance, and kind of wait for them to do their thing. I don't know, the Detroit police response time. Not the greatest.
What was it?
Although when I told my roommate today, hey, that's not bad. It took him about 35 minutes, and he was like, "Hey, that's,
That's
not
not
bad."
bad.
I maybe at 7 in the morning I would have thought it'd be a little. I don't know, but yeah. So the whole thing took about 2 hours, for me to actually, get everything done with the insurance and the police and get Enterprise and all that jazz. So anyway, that's why I missed yesterday's show. But hopefully I'll get this worked out too. It was an interesting start to the day, to say the least. So,
Yeah, that's not the way you want to start your day, to
No,
go out there and
it's okay.
see your car sitting on the curb that you did not park on.
yeah, and it's not the steepest curb, so sometimes you can like unintentionally drive up on it and not notice it. But I was like on the grass, and I was like, I'm not that bad at Parker. I don't think I parked all the way up there. I would have noticed that last night. So he actually hit a few cars. Not mine, just got the worst of it. But yeah. So
Oh, he hit a few cars.
yeah. He hit a few
Looks like
cars.
a drunk driver, like
He-
bang, ba-dang,
yeah,
ba-dang,
yeah,
ba-dang.
He hit a few cars. He hit.
You
it's
saw
like-
multiple cars on the road hit?
Yeah, he hit. Well, he hit like we were all parked on the side of the street. He hit at least 3 cars and then drove away.
Is this
Um,
like a Wolf of Wall Street type of deal? Remember that scene in Wolf of Wall
I
Street when
do,
he
I
goes
do,
out
I do.
with the Lamborghini? I
Maybe
think
he
it
was on
was.
Quaaludes. Maybe he was on Quaaludes. Yeah,
That's
yeah,
on Quaaludes, the Wolf of Wall Street thing
yeah,
here again.
yeah. Oh man.
Jordan Belfort.
Oh
Jordan Belfort's your man. That's what you should have told the cops. I think it's Jordan
yeah.
Belfort.
I shoulda, woulda, coulda. Anyway, back to the story may not be as funny as I could have maybe. It seemed funnier yesterday, or not funny, but it seemed like it could have been more interesting than it was, but maybe not so interesting. Anyway, back to the markets. A couple of ratings to note today. Not too many, but we did have Twilio getting upgraded this morning by J.P. Morgan. Let me pull up the exact rating, unless you have, Dennis. It's Twilio, J.P. Morgan. They upgrade the stock from neutral to overweight.
Yeah, so and this stock is one that just can't seem. It seems like every time it gets any even analyst love, it just gives it right back here. So am I chasing it up 6% here? No, because there's so much overhead supply. That being said, this is the only thing that's going to kickstart it is an analyst rating. I mean, this thing has just been kind of dead money here for a long time. Back in September, this thing was a $70 stock. Now looking at it, here we are about 6, 7 months later, 26 bucks. Every time it comes back up, it seems to just come right back down. So I will say, we do have major support down here in the 26 area, but obviously we're not looking at that now because we're trading up $1.50 here in the pre-market. So we're getting back all of Wednesday's losses here, trading back up in the range where we were Wednesday, Thursday, and then you start looking, well, man, we were, trading here for 2 weeks between this 28.5 and 30. I think, 30 probably puts a short-term lid on it if it really gets kickstarted here, but I'm just concerned to chase something up that's got so much overhead supply. Ton of overhead supply in here. Yes, maybe the ratings, analyst ratings, positive can. Was there a price target on it?
Not that I saw.
Okay. Buck
Yeah.
and a half seems to be mostly priced into me, 6%. It's a pretty good move here from J.P. Morgan. And I just saw what happened with Sarepta. Not this completely different company, but we've been saying how Sarepta can't seem to get off the mat. And 2 days ago, Sarepta gets a nice upgrade. And by the end of the day, it was right back to flat. So that's what I'm kind of looking at here in Twilio. I don't know if people are just going to jump in this thing and buy this thing up over 29, 30, 31 because JP Morgan came in here this morning. I think people have done their buying here. It's up at 54,000 shares. So I'm more of a fader of this upgrade just because there's so much overhead supply. Maybe my bogey would be if it actually took out 30. Maybe I'd cover on that. But I just can't jump on board here on this Twilio bandwagon because it's just a stock that just can't seem to catch a lift.
And I'm looking at the chart now, going back to the IPO from June. Doesn't this remind you of Twitter in the way, like just the shape of the chart? It rallies up right off the bat and then straight down, pretty much.
Twitter is just ugly. I mean, I've been looking at the Twitter for
Twilio
a
is
while.
just as ugly, I think.
They're both. These are dogs, and you're talking a market environment that's been pretty strong here. I know last couple of weeks we haven't been, but these stocks have been perennial underperformers here. And if you're looking, if the trend is your friend, and in this case, it is not your friend if you're a bull. Same thing with Twitter. I mean, this stock just continues to leak. Valuation is still a concern for me. That's why I haven't bought the stock. I think, I've said before the 14 level I think is big on Twitter. I think we're going to challenge that maybe even as soon as today. If we go back and just look in April, we bought it multiple times, 1370, 14, 1404, 1390. Lots of support here, about 60, 70 cents below. So could you take a shot on Twitter? Sure you could. Maybe it bounces there the first time. The only thing I think is really going to kickstart Twitter, I think if you're in it, I think you're still banking that you're hoping somebody is going to make a bid or maybe another rumor is going to materialize to get you out. But I just don't know if I see that happen. I think, that ship has sailed a little bit here, and that's the concern. If you're buying Twitter here now and you're just hoping, for a takeout, maybe that happens. But if it doesn't happen, where's the price go? I mean, you're still talking about a pretty significant, a pretty heavily valued company that still hasn't figured out really how to monetize the product that they got. The MAUs aren't growing here. There's issues here with Twitter.
Moving on, a couple other ratings to note. I mean, there's a few, but not many of them are really big names. Walmart caught an upgrade this morning from Tesla, not to be confused with Tesla. But Walmart getting upgraded from market perform to outperform, and the price target was raised from $73 to $82.
Getting a little bit of a kickstart. Walmart's a defensive stock that if the market goes to sell off, and we're going to know more in 10 minutes after this jobs number, but if the market goes to sell off, that's a stock that I might, think that could actually potentially catch a bid. The other thing going for Walmart a little bit is that the retailers have actually shown some life, and we're going to get our retail analyst here on at 8:35, so we're going to talk retail stocks at 8:35. But great day for Kohl's yesterday. Great day for Nordstrom. Did settle back. Macy's had a good morning, at least. DDS, Dillard's had a good morning. You saw a lot of money flying into some of the retail stocks for the first time in a while here. So at least they got kickstarted. Walmart's a retailer, but Walmart's kind of its own animal too. It's more of a defensive name than anything because people just shop at Walmart. 2.84% dividend. It's almost started trading like a bond a little bit. But, it's a stock that can move up in a down market. So that's something to consider here. That being said, if I'm just looking purely at the technicals on Walmart, multiple highs in the mid-72s. So it gets up there in the mid-72s. I think it struggles again. So lots of resistance up here. So my company here this morning buying at 71.92, chasing it up 50 cents. Nah, because there's so much overhead supply. It seems like 72.5. A lot of resistance there. It needs to get up over 73 to really get kickstarted here. And I'm just not sure it's got the gas to do it. Walmart has its own problems. It's so big, so hard for the company to grow. That's why it started trading more like a bond than anything.
And pretty much the biggest directly pegged stock to Amazon at this point. So something to keep in mind, obviously, every time you're trading Walmart is what's Amazon up to. Log Me In upgraded this morning at Cowen from market perform to outperform. The price target was raised from $100 to $115. This is LOGM. They are the company that lets you log into your parents' computers for them when they don't know how to use them, is how I've used it in the past.
This one here is interesting to me too. $100 is the level here on LOGM. You can see the major resistance back in March. We did get up there close to their 99.75 3 trading sessions ago. It's bid up at 99 right now. That's the bogey for me. LOGM, $100 is absolutely enormous psychological level there as well. So if I'm trading LOGM, that's the level I'm watching there. Could it get through there? Sure. But I think, it's a consideration there just on LOGM that it's such a major resistance level, psychological level. $2.50 is kind of like what I think that upgrade would be worth, and it just kind of coincides nicely with the $100 level. But overall market is going to have an impact here as well because we're going to be volatile, I think, off these jobs number. So in 8 more minutes, we'll be able to tell you more as well.
One more, Sunoco upgraded this morning at Barclays from equal weight to overweight. They raised their price target from $26 to $35. This is SUN.
SUN had a huge move the other day, selling some assets. Actually, that was yesterday there. So I believe if you go to the Pro, you probably can find the actual headline. But they sold some assets, got the big pop. Now it's getting a follow-on upgrade. Is it upgrade?
Yes. Yeah. It's upgraded.
So it's getting a little bit of a follow-on upgrade here. But the big move was already yesterday. So major overhead resistance up at 29.5 all the way up to $30. So
and
again, you're chasing this one too.
That deal was they sold the majority of their convenience stores to 7-Eleven for $3.3 billion in cash. That was the Sunoco deal. So cash in the bank. Only other rating that jumped out to me this morning was FedEx, initiated by Lead Capital at a buy. They announced a $234 price target there. That's the only ones that really stick out to me.
Yeah, full disclosure, I have a small long position in FedEx there, so I'll leave my commentary on that one because I don't want to talk my book.
Great. All right. Moving on. Any other real news this morning? I mean, we have the airstrike. We have the
dry ships.
Oh my gosh!
Another reverse.
Don't remind me. What is it? What was it? 1 for 4?
Only 1 for 4 this time. So they're gonna have to do one again like next week after they do this one.
Yeah. Oh boy.
Is that not the craziest stock though? That just all these look at just put it in perspective here. This thing just the reverse, but just murder it. I mean, even going out to the weeklies, that adjusted move. Remember when it went from like what was it? From the 100 to actually I just go to the dailies. I can see it on the chart. When it had that move from like $3 to $100, then it did the reverse split. Well, that high now on an adjusted basis is $816.
Yeah.
And the stock is at 80 cents. Good luck ever getting back there again. This thing is just a license for people to just lose money. So it's a cash If you're along this thing, it's just a cash burning machine for you.
Can you
So
can you explain like how a company can do like so many
can't
reverse
figure it
splits?
out, Spencer. I don't know why they don't just delist this thing. Like they keep allowing it. They reverse split it. They bring it back up. They bring it back up again. I mean, the all-time high on this thing, I don't even know where it's at. In 2010, it was $80,000 a share because it's done so many reverse splits.
Yeah.
I mean, this thing is just, you get these little short squeezes every once in a while. That's the only thing that seems to ever lift the stock is the short squeezes here. This is a stock, in my opinion, that they should delist and be done with. But they keep doing it. They keep doing the reverse splits. They do it again because they want to keep the price up above $1. Every time it falls below $1, they just reverse split it. And I guess that's how they roll. But you can see it's trading down on my loser board. It's number 1 here this morning. Actually trading down 21% here in the pre-market because they announced the other reverse split. Which do we have a date on that? It's going to take.
I was actually gonna ask you that because I don't have a date.
Knock knock.
Knock knock. Who is it?
Brentster!
Hey!
Whoa, Brent,
What's going on? You snuck in.
I
was wondering
just
where that
snuck in
static
on
was
you
coming
guys.
from.
You know, this dry ships conversation.
I totally just snuck in on you guys.
I was wondering. I was like, where is that static? It's not
should have
me.
been saying who's there.
It's not me.
You didn't get
I thought
it.
it was a knock knock joke. No good ones.
I see. I'm looking at the press release right now. I see April 11th, Dennis.
April 11th for the reverse split.
Reverse split will take effect April 11th on opening print.
That might be too far. It might not be. It could fall down to like 25 cents and then not still go over $1.
Right.
This dry ships just blows me away though. How many reverse splits? Do we have any? Like how many reverse splits have they done in like the last year even? I feel like they do, like every month.
Let me see if I can find that information real quick.
It's been a while though. Maybe it's been a couple months since they did one because they had that big run.
Oh my gosh. So they did in August of last year. They did a 1 for 4. Sounds familiar.
Yeah.
They did on November 1st. They did a 1 for 15. On January 23rd, they did a 1 for 8. So Dennis, this will be the 4th stock split in I want to say about 8 months.
Wow, reverse splitting machine stock. So here
That's
we
crazy.
are, 80 cents. It'll reverse split, go back up over $3-4. Maybe have a short squeeze in there, but eventually be back down under $1 again, and then they'll have to do it again.
Right.
Trend definitely not your friend on this one. People who buy this thing, I warn them, this is just a good way to lose money being long the stock.
I wanted to
It has its moments, but that's it. They don't last.
I wanted to jump on ahead of the jobs figures.
Yeah, get us the numbers. And can you stay on with us? I'm gonna go
Yeah.
try to actually trade this jobs number
right,
because
Brian, it'll be you
this
and me.
is I think gonna be a crazier move off this, and I'm watching the financials closely. That's what I'll be watching and trading off this. So Brentster's gonna preview the number for you,
Sure.
take you through the number, and then I'll be back on to tell you the fireworks afterwards.
All right. Good luck.
Thank you.
All right. So let's see. This number is gonna be out here
About 3 minutes.
in about 2 minutes or so. Yep. So I'm pulling up my data right now. Let's see what the estimates are for. Looking for a private sector reading of about 175,000. That's where the street is right now in March. Excuse me. We're going to be getting the March reading. In February, the reading was 227,000 for private. Looking at the non-farm sector, we're expecting a figure around 180,000. Last month in February, the last month that this was reported in February was a reading of 235. Where is the unemployment rate? Looking for about 4.7% on the unemployment rate. That would be unchanged from the February reading.
Can you please repeat the first number, the actual
Private sector number? Private sector, we're looking for 175,000. Non-farm, we're looking for 180,000, and the unemployment rate, we're looking to be unchanged, about 4.7%.
All right, Brandon. This is just you and me now. This is
We
rare.
can do whatever we
We
want,
can do
buddy.
whatever. We have no Joel. We have no Dennis.
And you know what? I came on to Dennis to commend Dennis. I think he's gonna be listening still. But
Yeah.
Spencer and I did a nice little video on Benzinga TV about dividend capture strategy, and Dennis really helped us kind of understand through that a little bit. So I wanted to thank him.
On the Benzinga TV YouTube channel, you can see Brent and myself talk all about dividend capture and scalping for a few pennies here and there. So, yep, Dennis helped a lot with that. Thanks. Thanks a lot.
Helped a lot.
8:29 now. We're got about just under a minute until this number's
40
coming out.
seconds or so.
Yeah, I mean, S&P futures not really doing a whole lot. Kind of just hanging out, waiting to see what this number is. I mean, we're trading up, like I said, since the low of last night. I mean, we were up over the last, minute or so. But I just heard we're about 30 seconds away. But seeing them spike up a little bit, but not a whole lot. And let me jump over to
A little bit of volatility.
let me jump over to crude and gold. Crude spiking down right now. Actually, you see over the last minute really or two spiking down from 52 to about 51 and a half, and gold looking
About
there.
5 seconds, Spencer.
5 seconds.
5
I'm
seconds.
waiting.
Non-farm number is gonna come in at
There they go.
98,000.
There they
We were
go.
expecting a reading of 180,000 on the non-farm figure. Private sector looks like the number is going to be. Private sector is 89,000. Street was looking for about 175,000. We got big misses here on our job report for the month of March. Unemployment rate. However, a big, huge silver lining here. Unemployment rate did fall to 4.5%. Economists were looking for a 4.7% reading, so that was a substantially better than expected reading, I would say, on the unemployment rate. And the market,
the number,
Spencer,
so the numbers missed, and look at that dip in the S&P futures you just saw, all the way
Yep.
down. What was the low there? The low was like.
I see under 2346 on S&P 500 futures.
I see 23.45 and a half really, all the way down. That was 23.52 before the number came out. So we fell about 6 points, and we're about 23.47 range, hanging out there. Looks like a little bit. So yeah, I guess Dennis was right. A hot number. The first hot number we've had in months now.
I'm trying to think of the last time we might have had a monthly reading under 100,000 jobs gained, and I can't remember the last time. I think it's been quite some time since we've had a reading, both the private sector reading and the non-farm readings under 100,000.
And Brent, Dennis and I were talking about earlier, and you can attest to this too.
Yeah.
Of the last few months worth of numbers not really doing anything as far as volatility goes
No.
in the market, and that's a recent trend. You've been in news for years, and it's only a recent trend.
Absolutely, only a recent trend, I would say. And Dennis, has his pulse on it too. I feel like he was observing it, around the same time I was. It's probably been like that for a good, I'd say, a couple years now, 2-3 years now. And I wonder if that's a function of. I'd say it's a function of the speed of trading right now, but also
True.
I feel that the Fed has really become reliant on the market
As opposed to the other way around.
as opposed to the other way around, which it was like that 10 years ago. The Fed didn't really care about what the market thought, and I just think that I think that the street really gets ahead of a lot of these numbers now because of that. Just kind of a little observation.
Just the speed of trading,
And the fact that the Fed is sort of hostage to the markets right now.
yeah, because when you were saying, a few hours ago, we were in this morning, you were saying that whenever a Fed speaker was on TV, you would have to,
Oh my
stop
gosh,
what you were doing and watch them.
Absolutely.
Because they can move the market. Any of the Fed speakers.
Right, and when we get the rate announcements, those things used to mean something. They used to mean a lot more intraday. They used to mean a lot more when the news was actually happening versus today, where I feel like, again, the market really just gets ahead of this stuff now.
So again, to repeat that number for you, U.S. unemployment rate for March, 4.5% versus a 4.7% estimate, so that's good. U.S. private payrolls for March, 89,000 versus 175,000 estimate, so big miss on that. And non-farm payrolls for March, 98,000 versus 180,000 estimate, so big miss on the non-farm and the private payrolls for the March jobs number, though. On a U.S. Unemployment rate was a few ticks higher than expected. The prior month was 4.7%, and we're down now to 4.5%. So I guess that's good. I do wonder, and someone's saying this in the chat as well, I do wonder how Trump will interpret this report, because it's a bit of good news and a bit of bad news. You could spin it sort of either way at this point. And S&P futures.
Has he held? I'm trying to remember. Has he held meetings, like a press conference after every jobs report?
I don't know.
He might have. I think he had one last month when the jobs figures hit, so we might see him today. We are going to our next guest, I think.
8:34. We're going to grab our next guest. It is Ryan Craver, a retail expert. He's the Senior Vice President of Emerging Brands and Digital at the Lamore Group. He's going to talk to us about retail has been hot, so we're going to talk to him about all those retail stocks in a moment. We'll be right back with Ryan. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Dennis Dick. We're on the line now with Ryan Craver, a retail expert. He's the Senior Vice President of Emerging Brands at the Lamora Group. Ryan, how's it going today?
Fantastic. Happy Friday, guys.
Happy Jobs Friday. Well, maybe not so happy Jobs Friday, but a happy Friday nonetheless. Ryan, you are a keen follower of the retail space, and the space has been hot recently. Give us a broad macro outlook on what you've seen in the past month or so from retail.
Absolutely. So I think the numbers that have come out from Census Bureau have been quite positive. The pockets of spend that we're seeing the most growth in are in home improvement, names like Home Depot, Lowe's. We're seeing some incredible weakness in names within the department store sector. So Macy's, Kohl's, Nordstrom, you name them, they're all having trouble. Within clothing specifically, the guys like TJX, Ross, Burlington continue to do pretty well with positive comps. And then on the warehouse side, Costco continues to steal market share from guys like Walmart, Sam Club, and BJ's. And lastly, the non-store retailers, guys like Amazon, continue to just go crazy. Double-digit gains month over month over month.
And so let's break that down a little bit. You mentioned a few stocks there. Let's dive into like one particular segment. So let's talk about like e-commerce, Shopify, Facebook, eBay, Amazon, et cetera, et cetera. What are you seeing specifically in the e-commerce space as far as companies, or what does the data tell you as far as companies that are well-positioned or not well-positioned for the next few months?
Got it. When we've previously spoken, I've been very bullish on Shopify, and the big reason for that is because a lot of the brands, both small and medium size, can easily go to Shopify, can set themselves up as a website, and sell any product that they so desire. I continue to believe that is the platform of choice for brands looking to sell on e-commerce. They're also very tied to guys like Amazon. So if you list your product through their site, you can also get it listed onto Amazon. I wouldn't be surprised if at some point Amazon or Walmart look at Shopify as an acquisition target, just given the scale and the ease with which they've allowed brands to set up. So I'm very bullish and excited by Shopify. I think there's a lot more room to run. I think the last time we spoke about them back in December, they were sitting at 39, so I'm a big believer. The second name in e-commerce, which you highlighted, is Amazon. Just last quarter, they flipped from 50% of their goods being owned and sold by themselves to 50% now being sold by third parties. And what that does for them is it makes them more of a service provider, less of an inventory holder, which will naturally bring higher margins. You've got AWS with the cloud service that continues to be anywhere from 40 to 60% growth year over year. I think they have definitely extended themselves. They've got earnings at the end of the month, so keep them close. But Amazon continues to do very, very well for all the brands that we have. And then that third horse within the whole e-commerce space is Walmart. And I think for their general stores, they still have a lot of performance issues, the shift to online, the higher wage increases, and it's going to be very, very difficult. I think on the e-commerce side, they've been incredibly aggressive to buy anything and everything. But, I think they may have overpaid for some of the assets that they did pick up, and we may see some write-downs in the future, maybe foreseeable future. So I'm most bullish on Shopify and Amazon and Walmart. I think it's a lot more wait and see.
Ryan, let's jump back into those big box department stores that you just mentioned there earlier. These things have been under pressure here for it seems like ever. Nordstrom, Macy's, Kohl's, Dillard's. They all caught a lift there finally yesterday. And, the media is trying to figure out, why. Obviously we had Bed Bath & Beyond. Maybe that was up, but then it gave its gains back there. What are your thoughts here? Finally those things do catch a little bit of lift. Is this nothing more than a short squeeze, or is there something more to be said here? But the maybe some of these things are getting cheap.
I think it's just a dead cat bounce. I mean,
Yeah.
I have been so pessimistic about this space for a year and a half now, and I still don't think it's going to get any better. I think what may have triggered it was Hudson's Bay, although they're traded in Canada, had announced that they're going to do a REIT. And so everyone who held considerable real estate assets as a department store, that may have been the big trigger. To your point, it may have been a little bit of a short bounce, but I can't see anything on the horizon that is good about any of these guys. Macy's has said they're going to close 100 stores. I think there's going to be even more. Kohl's, for whatever reason, is I don't think they're being honest with themselves. They haven't announced a big amount of store closures. They've just talked about grooming the size of the stores. I think it's going to be some considerable store closures for them. JW Nordstrom, they're a little bit interesting because their rack or their off-price offering, Nordstrom Rack, is doing quite well. But their mainline business, the main department stores, aren't doing so well. And then on the e-commerce side, they are definitely paying to get the sales. So I can't see anything good for these guys anytime soon, and I would just avoid them at all costs if you can. If you're forced to put your money into any name within the department store space, I would put it in Nordstrom because it's the top performer relative to everyone else. But I wouldn't do it. I'd look to shift it to either warehouses, home improvement, or off-price players.
Ryan, what about the dividends on these things? Because you look and there is some people who are jumping in saying 5.5% dividend in Kohl's and, Nordstrom 3.5% dividend, Macy's 5% dividend here. Do you think those dividends are safe?
I don't. I think they're going to start to pull those back considerably. I mean, I know we kind of had this conversation 2 times ago when we spoke, and at the time, Macy's looked like a pretty respectable dividend, but it was trading at 42, and now I think we're right around 29. So yeah, dividends are nice, but if you know that the actual stock price goes from 42 to 29, I just don't think there's any value in keeping it. We don't know where the bottom is for these department stores are, but I don't think this is it.
Jumping over to
Ryan, it's
go
funny.
ahead,
I don't want to
Spencer.
interrupt. It's funny you mentioned the REIT play because we know that's what Joel's been on now for a while, and Simon Property Group is how he has been interested in playing. The big box retailers is through the REITs. So it's funny that you brought that up. Joel would be happy if he was here that you brought that up.
Well, what's interesting to me is everyone's talking about the REIT play, but think of every single retailer out there that's a big box that is currently putting their stuff up for sale due to closure, liquidation, etc. I mean, at some point we have too many big boxes, and there's not going to be much interest for these big boxes. Yes, you can cut them up into multiple stores and other things like that, but there's significant capex to do something like that. So, I'm not a big believer in the value of the real estate. I think the value of the real estate looks good now for metro cities like New York City, Los Angeles, Miami, certain cities. But beyond that, all the malls are pretty weak right now.
Ryan, what about Sears? This stock has been, one of the worst, obviously, but back in February, it looked like, and they had this, note come out actually just, I think it was a couple of weeks ago, saying they didn't know if they're even going to be, able to continue operations here. And the stock went up on that. The stock went up from $8 to $12. What do you think's going on here?
Yeah, so Sears is actually a customer of ours for 4 different brands. And just internally, we have struggled to understand what to do with Sears. Should we continue to ship them? They are still paying their vendors. With that said, I think there are a number of their brands in their stores that are probably getting a little skittish and probably stopping shipments to them. I can't see how there's any excitement around this name longer term. I think it's the Eddie Lampert shell game. I honestly, if you're looking for a long-term gain, I would not put money in here.
What about its brother J.C. Penney? Because this one hasn't got a kickstart there, and it's looking like it's been leaking here for years. I mean, we're $5 here now on J.C. Penney. This was a $40 stock back in 2012. This story over as well?
I think so. I think they initially saw some excitement because they added appliances to what they were selling, which is a big ticket item, so it brings up the average unit retails. They traded on that for a while, which helped boost their comp sales, but now it's deteriorated as they come around for the annual swing of the appliance sales, and they can't show any growth. I mean, I know I sound like negative Nancy right now on all the department store names, but again, this is one I would not put any money into.
Ryan, do you follow eBay?
I do.
What are your thoughts on eBay? I'm trying to bring something back positive, maybe. Maybe.
Well, you know, eBay, I'm a believer that the long-term plan and the long-term view that they're taking is good. I think that domestically they will do very, very well as they clean up their listings. It's still a major destination for a lot of consumers for brands that aren't necessarily captured everywhere else. To bring Amazon back into the picture, a lot of these third-party sellers left eBay to go to Amazon. Now that Amazon is making it harder to list a brand because they're trying to fight the counterfeit issue, more of those sellers are going back to eBay. So I think as that team works on cleaning up the site, the way in which you search, the way in which you pull product down, it's gonna do well longer term. I think it's a good name.
We've been on the line with Ryan Craver, retail expert, senior vice president of emerging brands and digital at the Lamore Group. Ryan, thanks as always for your analysis. We will talk to you again soon. Have a good rest of the week and a good weekend.
You too, guys. Always appreciate it. Have a good weekend.
Thanks, Ryan.
All right, Dennis, how was that number for you? Fun, right?
It was some movement there. So I was trading some bank stocks. There was some movement. The banks got hit. The banks got hit hard on it. So, and we're actually seeing, a pretty adding on to the rally in gold, adding on to the rally in the bonds. The TLT is lifted up here as well. But the banks got hit pretty hard here. Citigroup trading down over 1% right now in the pre-market. Bank of America trading down 1%. Goldman Sachs trading down more than 1%. Morgan Stanley, they're all down 1%. Wells Fargo. So if I'm looking at what got hit on the report, the banks got hit the most. Overall market got hit as well, but not that much. We're down about 3.5 points from where we were trading prior to the report. The banks is really what stands out because they were trading flat, like I said, going into the report, and they got hit pretty hard. So, maybe they think, interest rates aren't going up anytime soon. But either way, the banks got hit. Other stocks that are still just moving here, the defense stocks are still kind of showing strength here. Lockheed Martin trading up 4 points, like we said before. Raytheon, which were the Tomahawk missiles, up 5 points here now. So you are seeing money. General Dynamics is up here as well. So you're still seeing money flow into the defensive names, the actual defense stocks there. As we don't know. There's uncertainty over there. B. Trudell asking why would oil sell off here? Oil has given back almost all of its gains here now overnight. I mean, logically thinking, if you're still thinking, war, it's still good for oil, but the market got hit here, and oil has been moving with the market for a while. So as the market goes down, it seems like oil goes down as well. Market and the oil historically don't have much of a relationship, but I'll say in the last few months, oil and the market have been moving actually a lot closer together.
All right, 8:50 about now, about 10 more minutes left. I did want to cover one individual stock that we didn't get to. That was Merck.
Sure.
They had some drug news this morning. They received a complete response letter from the FDA related to a study with their drug, sitagliptin. I hope I said that right. Sitagliptin.
You do the best job on it. I butcher
right.
those names.
And I mean, you can see what its stock did this morning. I think usually complete response letters, they govern the approval process, is my understanding of of how they work. But regardless, I mean, you can see what the stock did.
Merck is significantly off the lows. They hit this thing hard. It got down to 61.26. I saw it trading at 7:30 this morning. So we were trading down over a buck, or over $2 almost on Merck. It's bounced back. We're only down 50 cents here now. So we've come back a long ways. And actually, we have a buy-in balance. So our opening buy-in balance of 40,000 shares. Not sure that, like I said, that's pretty small. So, one institution come in could shake that off. But it's come back off those lows. And if I'm looking at it, I think there's a lot of overhead supply up at $64 if it was to really go into rally mode here, because they've, initially hit it. But it's come a long ways back here. So let it digest. Let's see what happens here at the 9:30 open. But caution, because it was trading a lot lower earlier.
Want to hit me with some imbalances?
Yeah, let's do it. So we had Merck with 40,000 to buy. Again, that's early, and it is still trading in the red here on what appears to be some bad news. So you might see an institution come in and fade that. American Express, 89,000 to sell. Not surprising, financial stock. You're seeing a lot of the financials starting to form some types of sell imbalances here this morning. Morgan Stanley, 22,000 to sell. Bank of America, 29,000 to sell. The financials look like they're going to be the weaker stocks here, at least at the open. Just looking, other ones. Ford, 71,000 to buy. Nike, 20,000 to sell. General Electric, 39,000 to sell. Disney, 32,000 to sell. They're all pretty small. Institutions probably not showing their hand that much this early, because we did have the jobs number. The S&P futures is still very volatile. So if you're a big money manager, you're probably not throwing out a big buy or sell order here yet until at least the market starts to calm down and show you some stabilization and where we want to be. So I'd imagine as we get close to 9:30, these imbalances are going to grow substantially.
All right. Get a question from the chat. Funny cars. What about GD? General Dynamics.
Well, General Dynamics, we talked about a couple times here
Yeah.
this morning. It is trading up. It has given back some of the gains. I mean, the overall market got hit after 8:30. We were trading up at 189, so up $2.50 right before that number. Number comes out and the market gets hit, and GD gets hit too. 187.50, so it hasn't got hit. It's still trading up $1 from the close. It's down $1.50 from where it was trading prior to the number. This is a stock that could catch a bit. I mean, it moves with Lockheed Martin, with NOC, RTN. Those all kind of move together here. So this is a stock that, we'll have to see. But if, there continues to be strength in stocks like Lockheed Martin, RTN, I think why not General Dynamics as well.
Any other stocks on your radar this morning? There isn't a whole lot of big movers. We kind of covered the gamut this morning. Anything
Yeah,
else on
we
your radar?
went all over the place. I mean, I think, NVIDIA would be one I maybe look at here. It was interesting yesterday. NVIDIA has actually held up quite well, and some of your tech stocks have been holding up well. We know AMD got hit yesterday on the sell initiation at Goldman, and NVIDIA got hit in the morning, but then it bounced back and closed again over the psychological $100 level. So you get the close above 100. So NVIDIA here is trading actually just about flat right now. So if you're looking for trying to find sources of strength here, NVIDIA kind of feels like it wants to go higher. Makes me start to think, okay, well, maybe some of these, in the NASDAQ too, if you look at the Qs, they're only down 0.1% here now. So if I'm looking, and you're always trying to identify, okay, if money's going to come out of the financials, it never seems to fly out of the market altogether. What sectors are going to benefit? I think why not tech? Maybe it's going to be some NVIDIA, and maybe there's going to be some of the other tech stocks that hold on maybe a little more relatively well. And obviously we talked about the defense stocks. Those are the ones you think about right away. But I don't know. I mean, this NVIDIA chart here, as long as it stays above 100, is still interesting to me.
Looking ahead next week, isn't next week the start of earnings season?
Has it already snuck up on us again?
I think Citi. I think the financials start next week.
Wow.
I see Citi next week. I think I see.
Quarters fly by.
I see JP Morgan next week. I think I see Bank of America, or I saw Bank of America next week. So yeah, it's already upon us. Seems like it just ended, but so we're already back. Looking ahead next week, already back in some big, because earnings season has been over now for a few weeks, but we're already back in earnings season once again. So right around the corner.
Yeah, the banks here, that's shocking to me. That's already earnings season again. Seems like we never left earnings season. But, we know the banks kick it off. They say Alcoa kicks it off, but not that many people watch the Alcoa report. It's more about when you get the big banks, the Wells and the JP Morgans and the Citis, that really kickstart earnings season there. So, obviously, that's going to be a potential driver going forward, as well as the individual earnings from these stocks. We know stocks like to tend to run up ahead of the reports. There's just that tendency there. So, maybe we see some strength coming back into the financials next week. We'll see what happens, after today. Let's see how, when the dust settles here. Because if you're a money manager, and that's what you've got to think. If you're a day trader, you got to think, what is the big money thinking? You're always trying to, envision where that's going to go, because people can talk high frequency traders, people can talk a lot of things. What really moves the market at the end of the day is still the big money managers. They're coming in here, they're moving in, a couple 100,000 shares or a million shares of a stock, it's going to move higher if they're buying it. If they're selling a million shares worth of a stock, it's going to move lower. So you've got to analyze, what are they thinking there? So they've got a lot of information to digest here overnight. We've had a missile launch, we've had a jobs number, we've got the banks getting hit, we've got the defense stocks trading up, we've got the bonds trading up, we've got gold flying here this morning. So, you've got to analyze all that from, the money manager perspective. And, once they have all that time to digest it, a lot of these traders or a lot of these money managers don't trade in the pre-market. A lot of them are trading during the regular session, because if you're a big money manager, it's hard to move big money in and out in the pre-market. The liquidity just simply isn't there. But after the market opens, that's when you start to see the real money come in. And that's when you sometimes see some reversals and stuff, because, big money comes in and it will move a stock. So if I'm just looking at it just from today, though, again, financials very weak, gold very strong. It looks like your classic risk-off day. But because there's so much information out there, I'd be cautious, just because there's going to be a lot of volatility. And there could be some wild swings here too. And just because the financials start trade down 1% doesn't mean they're going to stay down 1%. I mean, they've been chopping around here. Just because gold's trading up, 1.5% here this morning, or $1.38 on the GLD, doesn't mean that's going to stay either. So you got to be cautious when we're still chopping and we have so much information to digest.
A couple M&A rumors from yesterday you may want to watch today for some potential follow-through. We had unconfirmed chatter that Japan's Mitsui & Co. is in advanced talks to acquire AK Steel for $11 per share. Stock closed yesterday at about $7. Not sure what it's doing this morning. Coach and Kate Spade, that deal continues to drag on. Coach got a new president and CEO, so maybe some implications for that deal. We talked about the Sunoco selling off its assets to 7-Eleven deal, a merger between Zalpin, ZPIN, and Seek International Investments for $9.10 a share. And those are the only real merger M&A rumors from yesterday. So may want to watch the AK Steel for some follow-through today. Dennis, any last thoughts before we wrap up?
I'm approaching this morning more cautious. I think, like we are still digesting. We're still in price discovery mode here. If I came in on a normal day and I see the financials trade down 1%, I'd be fairly confident that, okay, well, this is a risk-off day and I'm going to approach it that way. But we're still chopping around here. Like here we are, the S&P futures have bounced all the way back. We're only 2 points down from where we were before that jobs number. And we got hit like 6-7 points on that. So we've come back, quite a little ways from the lows here as well. And overnight, we were a lot lower, because at one time we were down like 17 points last night after that missile launch, and then we came all the way back to scratch. So chop is the name of the game today. And for choppy, trend following, those types of strategies don't work as well. More contrarian strategies are fading the moves. So, mean reversion type strategies, sometimes those can work as well. But I think today is going to be a lot of chop, and that's why I'd be cautious if I'm just a trend trader here today, because, the trends could get all chopped up here this morning. So I see a day of chop potentially for today.
All right, 8:59 now. We're going to wrap up for the week. Looking ahead to next week's slate of guests, we got Michael Pachter on Monday from Wedbush. I know someone in the chat, maybe a few weeks ago, wanted to hold Pachter to task for, I think it was his bullish or his stance on Netflix. Well, he'll be on Monday, so you'll get to ask him, exactly what you want to ask him. He's probably one of the more in tune guys to the video game space, but does a lot with technology as a whole. J.C. Peretz will be on this show on Wednesday. We're going to have on Thursday Arnie Elman, the blue collar investor. So a good slate of guests, and we'll obviously have more than those three, but that's just a preview of our slate of guests for next week. Hope you enjoyed our show today, and our shows this week, I should say. Hope you enjoyed Ryan Craver. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. If you missed any part of the show and you want to catch it again, you can rewind the YouTube show as it's airing, or you can catch the podcast when it's posted in about an hour and a half or so. That's on iTunes, SoundCloud, and Stitcher. Just Google Premarket Prep on any of those platforms, and you'll find it there. That's it for us for the week. That's it for Dennis and myself. Have a good weekend, everyone. Have a good rest of your day. Good luck out there. We'll be back with you folks on Monday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.